Back to $1 Insights. If you sell digital services globally, you might have VAT obligations in multiple countries, even if you don't live there. But how does this work? And when do you actually need to register? Let's break it down. VAT, or value-added tax, is charged on most goods and services worldwide. But here's what many businesses don't realize. Digital services like software, e-books, and memberships are often taxed too. Here are common digital services that require VAT. E-books and online courses. Software as a service membership sites and subscriptions. Mobile apps and games. Cloud storage and hosting. Digital consulting and coaching. So, when do you need to register for value-added tax? Let's find out. Many countries have VAT rules for digital services, but they don't all work the same way. Some require all foreign sellers to register immediately, while others only make you register if your sales exceed a certain amount. If you sell digital services in the United Kingdom, Japan, South Korea, or Argentina, you must register for VAT from your very first sale, no matter how small. Some countries allow you to sell up to a certain limit before requiring VAT registration. These include the European Union, 10,000 euros across all EU sales, Australia, 75,000 Australian dollars, Canada, 30,000 Canadian dollars, and Singapore, 100,000 Singapore dollars. Finally, some countries currently do not require VAT registration for foreign digital service providers. However, tax laws are constantly changing, so always check the latest regulations. For example, if you're a freelancer selling online courses and you make even one sale in the UK or Japan, you have to register. But if you're selling in Canada, you only need to register once you hit 30,000 Canadian dollars in revenue. Let's put this into perspective. Anna, a freelance designer from Canada, sells branding templates. After surpassing 10,000 euros in EU sales, she has to register under the EU One-Stop Shop OSS system, even though she's not based in Europe. Here's an important exception. If your customer is a VAT-registered business, you usually don't need to charge VAT. Instead, the reverse charge mechanism applies. How the reverse charge works. If your client is VAT registered, you don't add VAT to the invoice. The client reports and pays VAT in their own country. Example, a German business purchases you for a digital service. Since they are VAT registered, you don't charge VAT, they handle it themselves. This means that if you mostly sell to businesses, you might not need to collect VAT at all, but you still need to check the laws of each country you sell to. Handling VAT across multiple countries sounds complicated, but here's how to make it easier. Step 1. Check where you need to register. Track your sales by country. Step 2. Use a VAT registration system. The EU One-Stop Shop covers all EU countries. Step 3. Automate VAT collection. Stripe, Paddle, or PayPal can do this for you. Step 4. Sell through a marketplace. Platforms like Udemy or Shopify handle VAT for you. Step 5. Keep records. Some countries require VAT reports, even if you didn't collect VAT. Example, if you sell digital products through an online marketplace like Shopify or Udemy, they collect and report VAT for you, so you don't have to register in multiple countries. So, if you sell digital services internationally, make sure you know whether and where you need to register for VAT. It's better to check now, before you get hit with a surprise tax bill later. Have you ever had to register for VAT in another country? What was your experience? Let us know in the comments. If you found this video helpful, give it a thumbs up and share it with others who sell digital services. For more expert insights on global taxes, online business, and finance, subscribe to $1 Insights and hit the notification bell so you never miss an update.